Thank you, Whip Hoyer and Ranking Members Pallone and Scott for having me here today, and members of the Democratic Caucus. Let me say that the state of Washington, we fully implemented the Affordable Care Act. We expanded the Medicaid program. We created our own health insurance exchange. I didn't allow the older transition policies to continue, so they diluted the risk pool for the individual market. We saw a decline in the number of people who were uninsured, coming from 14% down to 5.8%, or 410,000 people as to what it came down to. The individual market is thriving in the state of Washington. We have more carriers in the individual market today than we did before the Affordable Care Act. The rate increases that we've experienced have been much less than what we experienced before the Affordable Care Act. We have 150 plans and 13 insurers in the market. We're doing extremely well in the state of Washington. We did an economic analysis of the impact that Trumpcare, the American Health Care Act, would have in the state of Washington, and I have to tell you, it's devastating. Not only the numbers that I just outlined here of where it goes from 5.8%, what we have today, would drive it up to 15%, which is 1.1 million people, and higher than it was before the Affordable Care Act. Our model modeled actual real people in the 2016 market and applied them then as if it went into effect immediately today as to what the Trumpcare would have in the market. We modeled three important factors, one of them being the individual mandate, the income-based tax credits going to age-based tax credits, and also the 1.3 factor from the youngest to the oldest from the standpoint of age rating. Well, in our state, it would go from 1.3 to 1.375, which is embedded in Washington state law. Based on these changes, as I mentioned, we see the devastating impact on the number of uninsured higher than it was before the Affordable Care Act. We also see that the young and older, lower and middle income people in rural areas are hit the hardest. People under the age of 30 and those between the ages of 50 and 64 are hard hit. People earning about $30,000 a year or below 250% of the federal poverty limit are by far the ones that are most seriously impacted. 81% of the people in our Medicaid program, 81% of those that, through the expansion of the Medicaid program, are at the federal poverty level or lower. Let me tell you, they're not going to go out and buy an individual policy. They can't afford it. It means that they go uninsured, and I'm extremely worried about that. Representative Scott mentioned what happened in the state of Washington in the 1990s. We wound up passing a comprehensive reform bill in 1993. In 1994, the Republicans took control. In 95, they repealed the mandate portion, but left in place the pre-existing condition protections. It was there in a partial fashion. It took 4 years, but the net result was by 1998, we'd collapsed the individual market in the state of Washington. You couldn't buy a policy in the state of Washington in 1998 or 99 because the market had totally collapsed, because you took away the mandate but left in place the pre-existing conditions. Markets, insurance don't work that way. It took, as I said, 4 years, but it totally wound up then collapsing. To salvage the market, we came back with the insurers to create a high-risk pool. That high-risk pool was one where the insurers would be able to screen the individuals on a common factor, doing a survey that they could, so they referred into the high-risk pool. That was enough to be able then to get the insurers to come back into the market. The sad part of it, however, is that 80% of the people who were screened into the high-risk pool couldn't afford it. As a result of that, many, 80% did not get that insurance. It took the Affordable Care Act with its Medicaid expansion, premium assistance, for us to finally get our individual market straightened around. Please, we can't afford to go back to the way it was before. Thank you.
Insurance Commissioner, could you compare the ability of the individual mandate to keep or bring people in a pool versus the 30% tax for that the Republicans have proposed for folks who do not keep continuous coverage, and the likelihood of success of a 30% tax versus the alternative?
Well, clearly, having a financial penalty has a great deal more motivation. Unfortunately, the Affordable Care Act didn't have more of a financial penalty, and it was always one of the criticisms of the Affordable Care Act that there wasn't more. In 1993, when I was there with Representative Scott, we saw the Republicans introduce a bill identical to the Affordable Care Act that had a much stiffer penalty than what we have right now in the Affordable Care Act. So it works. But trying to go to something like a 30% penalty, you're only going to incentivize those that are younger and healthier in particular to sit it out and be prepared to pay the penalty once they become sick. If there's a diagnosis of cancer or multiple sclerosis or whatever it might be, they're going to jump over very quickly, pay the penalty, and it's going to be a minor impact. It means that they can be free riders in the system and then come in late in the game and come back. You don't have that with a financial penalty, particularly if it was a little bit stiffer than what we have right now. But even with what we have right now, we saw it work in Massachusetts, and I'm sure that you could see it work on a national basis, and in the state of Washington, where we've had phenomenal success already. Going to what the Republicans are proposing is obviously going to be one that will have much less of an impact, very negative, in fact, from the standpoint that you could see deterioration in the individual market as a result.
So, and just to follow up, it almost then follows that based on that analysis, there'd be more pressure, more price pressure on seniors or older Americans who, under the Republican plan, are already getting hit pretty hard based on how they want to distribute costs.
Absolutely. You deteriorate the quality of the risk pool. You wind up with more sick people, less of the healthy people, and insurance works pretty bad when you only have sick people in the market.